Profits at Harley Davidson hitting the brakes last quarter, skidding 41%, mostly on the impact of a stronger dollar on overseas sales. Still, sales were higher and earnings topped Wall Street forecasts, and shares today revved up nearly 4% higher. So what's next for the motorcycle maker? Morgan Brennan takes a look.
For Harley Davidson, currency headwinds will add even more pressure to sales and margins this year, overshadowing a projected increase in worldwide motorcycle shipments. But analysts say despite those FX woes, results were still better than feared.
The concern was that in some of these international markets, as the U.S. dollar appreciated, that you would see a drop-off in demand. And the good news, I think, coming out of today is we saw the opposite.
Harley's been expanding beyond its core ridership, American baby boomer males, since the downturn, targeting millennials, women, African Americans, and pushing aggressively into new markets overseas. The company's been gaining ground in Europe, Latin America, and Asia, especially China and India. That's now where the lion's share of Harley's growth is coming from. International shipments now make up more than a third of the company's total, and fourth quarter retail sales increased 9% abroad, versus a nearly 2% decline in the U.S., despite lower gas prices. New bike models have successfully been geared toward these new customers as well. In India, 3 out of 4 motorcycles ridden are Harley street bikes.
They've been working for years to expand their distribution in those markets, and I think it's a key component here of the growth moving forward.
But again, that could depend on the dollar, because a stronger greenback could make exports more expensive. Competitor Polaris Industries, which reported earlier this week, is already forecasting a slower year for that very reason. For Harley, however, that hasn't yet happened, pushing shares higher as international demand chugs along. For Nightly Business Report, I'm Morgan Brennan.